Welcome to 𝐂𝐓𝐇𝐄𝐑𝐄𝐔. We talk about investing, finance, and professional development. So current time of 8:12 a.m. on the Eastern Time on November 6th on Sunday. Hope you guys have a good weekend, by the way. Ethereum $100,616, about 0.66% so far. Respect over crypto market, throughout this weekend so far, it's been just gliding on the same level. If you look closely on the chart, you could see that we are pretty much just getting rejected all left and right as we reach this level ever since on October 29th. We reached this again on the 4th, and then we reached this on the 5th and subsequently the 6th, which is today, but you could see that clearly it's been just kind of giving up with a lack of strength that we're seeing clearly, getting rejected at 1650, okay? And on the technical front, you can see that we have been quite elongated on a daily, with heads of peaks that have been showing signs of rejections on the top of 70 out of 70, 1, 2, 3, 4 times. And you can see that right now we have this triple peaks rejecting higher levels, indicating more of a bearish sentiment across investor psychology. And on a weekly, you could see that we are seeing something very comparable. 1, 2, 3, and also with this slow elongation of extension on the technical automatic front, but also on the technical level front, you could see that we are getting rejected right now. And on the monthly, you could see that we should ideally see some sort of rebound, but nothing anytime soon, based on the time frame that we're seeing clearly. On the Bitcoin side of the equation, you could see that we're seeing something very comparable, right? Weekly, it looks extended. No, not weekly. Monthly looks extended. Weekly, it is looking quite elongated with a triple peak as well. And then on a daily, 1, 2, 3. So more bearishness should be happening. So seeing lower levels, you could see that 21,500 is clearly a level that you could not get to. So coming back down to 20,000, coming down to 19,000, all the way down to potentially even 17,500 can be impossibility. It would not be illogical for us to understand. Okay, and then take a look at the media front. Before I hop off, I do have to get going soon. I'm just doing this for a quick favor for you guys. The seems like on the stock market front, we are indicating more of a green Monday, which is typical. You could see that across the spectrum of up 1% so far. And in addition to that, seems like there is some lingering news around the holiday spending that's coming up with respect to Thanksgiving, Christmas, and I think with respect to high inflationary pressure that we're seeing, it would translate into higher costs in comparisons to regular times. So I think, just logically speaking, with rising, numbers of unemployment, rising prices of consumer goods can definitely dampen holiday spending this year. So with that being said, that can also dampen the CPI report and the PPI report, which will be a negative correlations onto depicting the outlook of the economy. So this is all just the interest rates that we've been hiking, the 75 basis point ones that we've been doing several times now, coming into effect slowly, and we're slowly realizing it. So something to be aware of. But this week we are going to be seeing some major catalysts, right? We are basically 40 hours away from the election day on the 8th, and then subsequent to that on the 9th and the 10th will be a CPI and the PPI report. So quite volatile this week. So definitely, hold on to your seats and be prepared. And then with respect to Berkshire Hathaway, Warren Buffett, it seems like he's been active buying some selective stocks, deploying another $1 billion into stocks. So it seems like this can be a good sign. But $1 billion is still a small amount of a net worth of what Warren Buffett, has. So it seems like he's just dollar cost averaging at the moment right now, like the way we always are. And then with respect to lastly, just trivial news. It seems like Twitter co-founder Jack Dorsey, is apologizing for growing the company a little bit too quick in the wake of the mass layoff. I mean, this is not really. This is during the tech boom, right? When Twitter went IPO, and with an ambitious goal, no one predicted that the COVID or the pandemic was going to happen, nor it was going to happen in this long duration of a manner that we've been experiencing so far, right? So With this layoff that Elon Musk has done is logical, and also I think it can be good for the burn rate and also the morale, even though it can be dampening at the moment for the long term, right? They have been burning $4 million per day, $4 million per day. And at the same time, with respect to just the pandemic, the capital expenditure on the real estate, on the facility, human capital front. What they need to do is to like firstly scrub up the company morale to be aligned with Elon Musk, but also keep it cost light a little bit more, right? 7,000 people plus for a company, the size of Twitter. I mean, it's a little bit too big, I would say. When I worked at a company that's similar in terms of what they're doing, it was 1/5 or 1/7 of the size of the workforce. So I do agree with Elon Musk that it might be a little bit too big. Unless you are a global conglomerate, right? So, anyways, nothing else to report on, but just want to give you a quick update. So this is a little bit more of a prompt one, but I appreciate you for joining me this morning, and have a good rest of this weekend. And I'll check you out next one. Take care. Bye.